talk about one, order block, two, break off structure, three, change of character. So these are the three things we are talking about today. So what is an order block? If you say an order block, it's normally the last bullish or bearish candle before a strong move. It's mostly found before a fair value gap. That is institutions place their trades at order blocks. So let me type it. Order block is the last bullish or bearish candlestick is the last bullish or bearish candlestick before a strong move. Before a strong move. So that is an order block. And it can be, order blocks can be bullish or it can be bearish. So before we will go to the chart and identify possible order blocks that we can find, per the definition, is the last bullish or bearish candlestick before a strong move. Okay, so this is, let me go to 1 hour, and we want to identify order blocks here. See, after this,
I'm zooming.
Okay.
Okay.
You see, after this move, from when price was trending down from this area, after this move, it dropped. Where is it? It dropped to this area and then moved up again. So how can we identify order block in here? This area, this guy here, this last candlestick here, created an order block. This is an order block.
Okay. If I may ask, is it the bullish or the bearish one, which is an order block?
Okay, so this is a strong move. This candlestick is a strong move, and look at the definition. Is the last bullish or bearish candlestick before a strong move. So before this strong move, which candlestick can we identify? Is this black one?
Yeah, black one bearish.
Yes. So this is another block. That's why price is respecting it. That's why price is respecting it. So that is another block. Let's look for another one. Is the last bullish or bearish candlestick after a strong move. So over here, this is also an order block. Okay, it's another block. Price respected it and came back to break it, because we have this um, big move. Is that your phone?
Hmm?
Was that your phone?
Yeah.
Okay. And again, which one again? Is the last bullish or bearish candlestick after a strong move. This is also an order block. This one. This is another block. After this strong move, the last bullish or bearish candlestick, this is another block. So if you're able to identify other blocks, you always find a point of interest, that is POI. So other blocks are mostly if you are an ICT or SMC trader, other blocks, yeah, are your point of interest to take entries, for entries purposes. So we are still identifying other blocks. Let me see if not respected it yet. So the last bullish or bearish candlestick after a strong move. Why is it always the last bullish or bearish candlestick after a strong move? Because institutions, those big guys who trade huge funds, it is where they take their trades. So it's they are the movers of the market. They create a strong move in the market. So if you can be at a position where your trade will be in line with those who are trading with big money, then you can leverage on that to make good money. But then if you trade anyway, at any zone, anyhow, then you always be at the wrong side of the market and you will be hitting stop loss back to back. So
Okay, can you go back? Let me ask you. Like for here, for example, you say this is an hour, 1 hour. You see the place that we've identified another block.
yeah,
On top of it, on top
here,
of it, let me see the point. Is
yeah,
around 3270.
32,
That is on top.
32,
Yeah,
70.
yeah. The place you are, just on top.
Yeah,
There, this one, the other one, on the right. Yes.
this one.
Yeah. What's that?
Okay, it's also an order block. This one is also an order block, but then if it's broken, we call it a breaker block. But right now we are not identifying breaker block, we are identifying order blocks. If we get to breaker blocks is a failed order block. Yeah, this is also an order block, and you can say this one is also an order block, but then it then turned to be a breaker block. When price came down here, it was supposed to respect it and sell, but that did not happen. It broke it and came back to retest it and then jump up. You get it?
Yeah.
So whenever an order block fails, it's still valid for a breaker block if only we've not gotten a retest. So if, let's say, when price broke this order block, if it just jammed up without coming back to retest it, then in the near future we would have targeted here as a point of interest. But here is the case, it has already been respected, so we don't consider this one as a breaker block again.
Because
Yeah.
it has retested.
Yes. So
Okay.
this one, you know why price is rejecting here? Is as a result of this guy, this
Order
break,
block.
this breaker block.
Mm,
Price price was supposed to take it up, but then we've broken it, and now price has come back to retest it again. So it could happen that we would have a break below if this candlestick here is unable to hold price to jump up. So right now gold,
mm.
because of this situation, I've exited the gold trade. Because of this,
Okay.
I'm outside of this trade. Unless if I will take any entry again, unless I see price break break this high and give me a retest, then I buy.
Okay.
So price is reacting to this breaker block. So that is another block. If we are to identify other blocks, is the last bullish or bearish candlestick before a strong move. So majority of the time you will see fair value gaps around other blocks. Those are the valid most valid other blocks. So let's
Fair
identify
value gap.
fair value gap or imbalance. Do you know them?
Yes.
Okay. So because we have between this candlestick, we have this a gap here. We have a gap here. So we have what we call fair value gap. This area, this area is a fair value gap. Price was supposed to close or pull back
Below.
below and then go up, but then because it is an institutional move, it's left a space. There was a space that needs to be filled. Then if that happens, what you have to find is which last candlestick occurred after that strong move. Then you mark the last candlesticks. At times you don't have to be so rigid to the point that even if the candlestick is small, you mark it. You can use the next candlestick so that you not get you not miss some trace. So you mark it like this, then you wait as your point of interest, wait for price to come back to it, then you take your trade. Because we have per the definition we said is the last bullish or bearish candlestick before a strong move. And wherever you see a strong move, there will be a last bullish or bearish candlestick. For buys, we look for um, other blocks below fair value gaps. For sells, we look for other blocks above fair value gaps. Example, this is a fair value gap
Mm-hmm.
here, a fair value gap here, a fair value gap,
Mm-hmm.
and the last candlestick was this one, was this one. So when price touched the last candlestick, it respected it, but what the move wasn't much. It didn't give a strong move, and then finally it came to break it. So this other block has failed. Then price needs to come back and respect it. Price needs to come back and respect it. Where is it? If I go to maybe 45 minutes, I will be able to find. Okay. Yeah, this, see, after there is what we call point of interest refinement. Is like if you identify another block in a high time frame, like the 4 hour, 1 hour, you can scale down to the lower time frame to refine the other blocks. This other block could be big at the higher time frame, but if you go to the lower time frame, you see that it's very small. Then you mark it and wait for trades to come to your zone. Then you trade it. So in the near future, I'll be expecting price to come and respect this, because it was an order block and it has failed. So now it has turned to a breaker block. So now that is another block. Other block, whenever you see, let me create this one small candlestick here for buys and a strong candlestick here. Let me change the color of this. So which one will be our other block? We said is the last bullish or bearish candle stick before a strong move. So then this one,
that one,
you mark it like this as your point of interest. And after that, you wait for price to come and tap you in, then you take your position for a buy. Vice versa for sales.
Okay, so
for sales,
so
similar.
the play I've seen you see the last place that, like this one, you don't enter in the middle the trade, like you don't enter the trade in the middle of the box.
You can
Inside
decide
the
to
triangle.
you can decide to enter at the middle, but mostly you miss. If you take 10 trades, you miss like 6 and maybe win 4. We mostly use this to gun box, which will give you like 50% measurement of that other block. Then you have your entry here and your stop loss above it. But majority of the time, price will come back, take the math of the other block and sell. And at times too, price will go deep into the other block and then sell. But since you know, if it's probability in probabilities, how should I put it? If knowing that whenever price comes to another block, it respects it, then why don't you take it from the math? Even though your risk will be high a little, but in order not to miss majority of trades, you take the other block from the math, then your stop loss above or below the other block, and then you do your calculation of your risk and you are good to go, in order not to be missing trades. So that is how we identify other blocks. Let me go to a different chart.
Okay, if I can ask, for example, this one on gold, I've seen you've marked a fair value gap, and then so you're expecting the price to reach the other block, or
which one here?
No, down below.
Here.
Yeah, that one. Yeah.
Right now, I'm not interested in anything that is happening here. Because it could be that this breaker block will send price down. We take price below here. If it takes price below here, the only thing I'll be interested in is a retracement, and I'll take a sell from here.
So, yeah.
You get it? So I'm not interested in anything that is happening here, because it's a risky area. So it could be two things. If we break below, I'll wait for a retracement and take a sell on any other block that will be generated at this area. And if we break at the top, if we break to the top here, I'll be interested to take any other block it's left it gave us below. Then I'll wait for a retracement and then buy to the top.
Yeah.
So whatever is happening here, I'm not interested because it's very risky.
Yeah.
So this is gold. If gold analysis, I was actually expecting a huge buy to this top here, but because of the concepts you are learning right now, I've realized we are caught in a in a tight angle where price can either break above or break below. So I don't want to be that rigid to be like price will go up, price will go up. I have to at times be flexible. Wherever price go, you follow it. That is how
So,
we trade.
so meaning you should not chase the market. You just wait for a nice entry, right?
Yes, yes, that is it. So that is how we identify other blocks. And let's talk about break of structure. So a break of structure is a scenario to break of structure. If you don't understand anything, let me know.
No. I'm understanding. That's why you see I'm asking questions.
Okay. Break of
You
structure.
know, I'm even you know,
Is that
I'm even asking myself,
okay? Because
like,
break of structure mostly they say boss. Break of structure is a scenario. Let's say scenario where price surpasses surpasses or break breaks a previous structure in the market. So that is a break of structure. So a scenario where price surpasses or breaks a previous structure in the market. It can either break above or break below structure. So with this one, we have break of structures to the lower side. Gold is breaking structures to the lower side. So for you to know where the market is going, you have to be able to identify break of structures, the trend of the market. You have to know where uh, you have to be able to identify break of structures. And trading is about being a good identifier. If you really have the eye to actually identify things, you can be a good trader. So this is a break of structure to the lower side, break of structure to the lower side. This is a break of structure to the lower side. So that is a break of structure. And for a break of structure to the top side, we have this is a break of structure. A break of structure. Because we are breaking previous highs. And for bullish we break previous highs. For bearish we break previous lows. So this is a break of structure. I hope you get it.
Yeah.
Okay. That is a break of and what of change of character? Change of character is also known as um, market structure shift. Break of structure, change of character. Mostly they call it choch.
George,
Change of character. Or if you don't see choch and you see MSS, it's called market structure shift. Let's identify market structure shift. What is change of character? Change of character simply means the structure being moved from either bullish to bearish, or structure being moved. Let me define it for you. An indication that a trend has ended and a new one is about to begin in the opposite direction. Let me type it. It's an it's an it's an indication that a trend has ended and a new one is about to begin in the opposite direction. I hope you are taking note.
Yeah, I'm taking.
Okay. So it's an indication that a trend has ended and a new one is about to begin in the opposite direction. So let's go to the chart and identify change of character. You see here, this side. Where is my tool? This side. Price was trending up, right? We were having a bullish market. All of a sudden, we had this strong move to the downside. I'm coming. Let me clear this. We had this strong move. This strong candlestick here. This one. To the downside.
Yeah.
And after that, we were creating, before that, we were creating higher highs, higher lows, higher high, higher low, higher high. Then price has come back to break this higher high, to break this higher low. And you know, if we have for the something like higher low, higher high, higher low, and the next drop price come to take the higher low, we have what we call the change of character. So this low is cleared. This low is clear, so we can either call it market structure shift or change of character. Same thing has happened here. If you are struggling to see, I convert it to a line chart. You see, we had a low here, and now price has taken it.
Yeah.
We had a low here, and price has taken it. That is a change of character. Change of character, which means per the definition, is an indication that a trend has ended and a new one is about to begin in the opposite direction. Abi, you get what I'm saying?
Yeah, yeah, yeah.
Okay. So now gold, because the reason why it is selling right now, we had a change of character, and then whenever we have a change of character, that means here now has become a lower high, a lower low, and now we have a lower high. It has to generate a lower low, a lower high, a lower low, a lower high. It's like that, and it goes. Let me clear here so everything becomes clear. So per this one, you see this candlestick, price respected this one to sell, because here before it was an order block. It's supposed to be another block, because if you go to 15 minutes or 1 minute, it was a low.
Mm-hmm.
Here was a low. That
Yeah.
price shouldn't have broken. So
Mm-hmm.
after clearing this, then there is what we call inducement. We will get to the inducement, the first pullback after a change of character or break of structure. So it generated a pullback here as an inducement or liquidity. Then after identifying the inducement, there becomes a breaker block. Then price used it to sell.
Mm-hmm.
We had the sell there. So that is how to identify a change of character. On a normal, the change of character actually happened here. Where is it? It happened here. It's
Mm-hmm.
actually happened here. If you go down to the lower time frame, the change of character happened here, because it is pushing up, creating higher highs, higher high, higher low, higher high, higher low, higher high. And this one was supposed to generate a higher high again, but then here is the case, price cleared it. So this other block that was supposed to take the price to the top now has been broken. And when it got broken, we've not come back to retest it. So now it is still valid for entry for sales, because we have a change of character here, inducement. Then we have other block, breaker block. Sorry, now here this one becomes a breaker block. That is why we have this massive sell. So we now can identify a change of character. Let's look for a change of character for buys. Sorry. So over here we have what, a break of structure here, a break of structure here,
Yeah.
a break of structure to this downside here. And since here was the break of structure high, the high of the break of structure, now price has cleared it. So what do we have?
Change of character.
Okay, are you alone or you are with someone?
No, no, I'm alone.
Okay.
I'm zooming. I'm zooming because I told you I'm using a phone, so I'm zooming.
Okay, so this is a change of character.
Mm-hmm.
So the reason why we have this buy to the top here to here is as a result of this change of character. Then after having a change of character, and we've not gotten to point of interest, but we'll do that another time. You look for the other block that caused the change of character. So this one,
That, yeah.
price came back, respected it. If you go, if you how do I say it?
Zoom.
Yes, price came here, respected it, but they couldn't break it down. Like couldn't break it below here. Couldn't break it. It respected it and went up again, creating here as an inducement, then came back again, then respected it finally. So it tested it 2 times. So that is why we have this push to the upside here.
Yeah.
So if you identify this, you only wait for your entry at an order block.
So can I ask something? Like for the inducement, the place that you trade inducement, you cannot enter a trade, right? Since there is no confirmation.
Yes. The only
Okay.
thing that will make you enter a trade at an order block is when you are able to identify your inducement. Because if you don't identify the inducement, then you'll be the inducement. Price will come back and clear you. You know, those who bought here long, who bought here would have their stop loss below here and will target the top here. They will think that price is done and it will come back and clear them and then still move up. Have you seen it?
Mm-hmm.
So if you identify your order block and the inducement is not yet found, you will be like, no, I don't know if the market will use me as an inducement. So the moment this price came back this to this order block, the moment it came back to this order block, bear in mind you've not found your inducement yet. We are not doing inducement, but because of the question you're asking, that's why I'm chipping in this. You've not found your inducement yet, so now you'll be waiting. Any pullback, first pullback after a change of character is what we call an inducement. Break of structure, change of character, the first pullback, a significant pullback after a change of character or a break of structure is what we call an inducement. So after having this first pullback, you are still hoping that price will come back and then come and clear the first pullback. Then you take your entry from the order block. And you take your entry from the order block. Then you have the buy. So that is a change of character for buys and sells.
So what about here on the sell? Like you see above the place that yes, that one.
I'm coming. You see, for now we have what we call the break of structure here. The break of structure here. Have you seen? Here is a break
Yes.
of structure. Okay.
Mm-hmm.
So there is what we call sweep of liquidity. There is what we call sweep of liquidity. After an inducement was taken, it's called sweep of liquidity. Now we are not having any inducement here. Before we can take any trade inside this zone, I have to find an inducement.
Mm-hmm.
Price can, if this market is able to come back here and drop again, then I can make this one as my inducement.
Yeah.
I can use here as an inducement, then take a buy from this other block. Then I will put my stop loss below here. But right now I don't have any pullback. I said what? For you to identify an inducement, the first pullback of a change of character or a break of structure is what we call your inducement. If you've not found it, you don't have to take any trade. So with this one, if price is this guy over here, is if it's able to go high like this and then come back to this other block, that is when I'll be interested in taking a buy, and then I will extend my how do we call it, my take profit. But right now I can't find any inducement, so there is no way I'm going to take any position.
And it's
And it's it's very important. If you don't find your inducement, you would always be the inducement. If you don't find the inducement, you always be in the inducement. And the inducement has to be at least 50% Fibonacci retracement. So if you put your 50% your your Fibonacci, the pullback should be on 50%. You get it? The first pullback should be on 50%. So right now it has come to the 50%, and if it's able to push to the top here and reverse back, then I'll be interested in taking the buy from this order block.
Okay.
If let me see something. It is reacting to this order block here. Let me check it well. You see why price is currently reacting to this order block? It's because of after the break of structure, the first pullback. So it has gotten this
Inducement.
guy as an inducement. That's why it is reacting on this order block.
Yeah.
So
Meaning this is valid, right?
this is valid. This is valid.
So it can buy to the point that the order block
Yes.
on the top.
Yeah, I'm coming. High, low.
It's above
Yeah,
50%.
it's above 50%, but it's supposed to be on 50%. It's supposed to be on 50% or below 50%.
So this is not not
So
valid.
this is questionable. So I wouldn't be interested. It's questionable.
Yeah.
It's questionable. Let me go to the 5 minutes. Check something.
You see, the inducement is here. The inducement has occurred, and then we're waiting for until a confirmation has happened.
I'm coming.
You said so, right?
I'm coming. High, low. This one. It's still above this one. So I'm not interested in this trade. I'm not interested. Unless price is able to come and break the previous high. If we are able to break this previous high, then I'll be looking for
Sells.
buy. I'll be looking for another retracement. Then
Okay, so for example, the price reaches to the point that you've said above.
sorry.
Where will you be buying from?
Sorry.
The place that you've said, if it reaches the place that you have highlighted, break of structure, there. If the price reaches there, where will you be buying from?
Any other block that will generate. Maybe if it generates another block here, and I'm able to identify an inducement. Let's say it pushed up here, and it gave me a first pullback. That becomes the inducement, and it goes up like this and come back again. I'll be expecting a buy.
I get it.
You get it?
Yeah.
So here, I wouldn't be interested in buying. If I'll buy, it will be because of the equal lows it has formed here. But at times, equal lows can be broken. if I will buy, this is what I'll be waiting for. This is what I'll be
Break
waiting
of
for.
structure, another break of structure, and then inducement, and then retest. Retest. They call it retest or what?
Order block mitigation.
Order block mitigation.
So that is my analysis on XAUSD. If price is able to, let me go to the 15 minutes. If price is able to break above this one, then I'll be looking for inducement to sell. But currently this guy, I can't use it as my inducement because it's not 50% retracement. It is above 50%.
Yeah. So mostly you use Fibonacci.
Yes. To identify my inducement, I use Fibonacci. You see this one from here to here. The inducement was between 50 and 61. Then any pullback again, I buy. But for this zone to the up here, if I will buy, I would want to, this one will be my inducement. I will want to see this guy rise up here and then drop again, and then drop again. Then I find the other block and buy.
Okay.
You get it?
Yeah.
Yeah. So if the inducement is above 50, no, you shouldn't mark it as your point or as your inducement. If it is above 50% Fibonacci, ignore it. So that is how we can identify change of character and then break of structure. And because of the questions, I think I've given you a gist of how to identify an inducement. But
yes,
you take time and treat it as a topic. So going to what we were doing. Where is it? Okay. So order block, break of structure, change of character. So now we can identify order block, we can identify change of character, and we can identify break of structure. So your assignment is go and identify change of characters and order blocks and break of structures and be sending them to me in my DM, like WhatsApp. Yeah. So we will treat inducement as a whole topic.
Yeah.
So the
So
concept.
if I may ask,
Mm-hmm.
for example, the thing that I've learned, it's enough for you even to identify a market, and you can also back test, right?
Sorry.
I'm saying the things that you've taught me: breaks of structure, change of character, inducement. It's enough for you even to identify a market and even back test on a demo account.
Yes. It's a strategy you can use. Whenever we have a break of structure, you wait for a pullback. You identify your order block. Example, this one. If not, let me check it well. This one wasn't order block mitigation. It used this breaker block. It used this breaker block to sell. It wasn't order block. So at times, if we have a break of structure and you identify a previous order block that was breached, that order block is still valid. Then you wait for price to come back and retest it. Then you take your sell position. Actually, for this trade, I was waiting for this order block, but then price decided to use the breaker block. Then I missed this trade. So if you don't identify order block, you identify a breaker block, and then you look for your entry. See,
if you identify
sorry?
If you identify a breaker block, so you're selling, right? And if you identify an order block, it's either you're buying or selling. So
Okay,
example,
wait, let me clear it for you. Order blocks are for trend reversals. Breaker blocks are for trend continuations. You get it?
Let me write it down.
I'm only teaching you order block, but because of the question, that's why I'm chipping in breaker blocks. We are not treating breaker blocks, but you can write it. Order blocks are for trend reversals. Breaker blocks are for trend continuations.
Yes, I'll write it down.
Okay. So, what's the time? I think you've spent like an hour. I'm hoping that this class will be recorded so you can get it and go over.
Yeah.
Okay. So gold currently where prices is very tricky. I want to only see some conditions met before I can take a trade. If I will take a trade, I want to mark here as my point of interest. But before then, I want to see price pull back and come back again. Then I take a buy. Because for me, if I'm unable to identify my inducement, I'm not taking any trade. An inducement will always happen before price will go to wherever it wants to go. So if I will take gold buy, this will be my conditions. If not, I'm not taking any trade. Then maybe target this high. Okay, so this is today's this comes to the end of today's class, and when again are we meeting? Maybe I think Thursday or Friday. Friday. Yeah, Friday.
Yeah.
So for yesterday and today, you've learned what someone used 4 years to learn, almost 4 years. But it's only up to you to actually practice it and then backtest it so that you become much conversant with them. Okay, so this class will be recorded, and I'll send. Let me even end there.